Okay, so good evening, everyone. Welcome to this virtual coaching class for the subject of corporate economic laws under the ICCA final course. And I'll be taking you for various topics under this particular subject, specific to insolvency, winding up, and small and other miscellaneous matter. Hope you have all logged in, and just a small confirmation from your end on the panels so that I can understand who are the people who have logged in. So friends, for the next 2 days, that is today and day after, I'll be taking the topic of winding up, which is relatively a new topic. Just 1 second, let me just check who are the people who have logged in. So I'll be taking you to the topic of winding up, where we'll understand the relatively a new concept. Yes, so we have Mr. Viraj Desai, Kaushiki, Syed, and Mansha, and Chiram. Right, great. So this concept of winding up, as I said, relatively a new concept with new provisions in comparison to what was there in the previous act. And more important is it was notified very late, though the Companies Act came into existence quite a long back, but then this particular section of winding up and the respected relevant rules were notified in 2020. But yes, after that, practically speaking, there have been very few cases which have been filed under this process of winding up. Probably people have not understood the concept of winding up, why it is required, and maybe the process is again tough to follow at times. A lot of ifs and thens are involved. Though this particular chapter may be compared with the insolvency part, the IBC Act, which also talks about closing down a company. But yes, there is some difference between the two processes, the IBC and the winding up under Companies Act. Friends, the winding up has been divided into 4 parts. Initially, when the Companies Act was framed, there were 4 parts of this particular chapter: Part 1, Part 2, Part 3, and Part 4. Part 2 and Part 4 are not there. Part 2 has been omitted. Part 4 is not relevant for exams. So we have to cover Part 1 and Part 3 under this heading of winding up. Part 1 from 277 till 271 to 302, and then thereafter from 324, 325 till 356 and 357. I think. So these are the 2 parts of this particular whole course content under winding up. And it's a long process, many sections, more of procedure oriented, along with the role of the court has to be understood, friends. Quite a different concept, whatever we have studied under the company law so far, because the company law has been focusing more on the directors, the meeting part, and the other related provisions of investigations, remuneration, merger acquisition, restructuring. But this particular chapter is totally focused on how to close down a company. So probably the first time you'll understand that if I want to close down a company, what could be the possible ways? So I'll be covering the 2 major portions of the whole laws in India, which talks about closing down a company, which at times we feel that it is it required to study that how to close down a company, because we all understand that business is a going concern. But yes, to complete the whole business cycle, The process, I think these are two essential parts. So as I mentioned, there are part 1 and part 3 of this Companies Act, starting from section 271 to 303 and then 324 to 358. So in all together, we'll have around 55 sections plus. Out of 55, for us, relevant would be around 30 sections. I think more than enough. I think if you study those 30 sections, probably they will be relevant for all of you for the exam part. But those 30 sections are quite important. To gain what? We need to study those 30 sections for what purpose? That's what is important, friends. The purpose is to get 4 to 6 marks. Maximum, I think it has been 4 marks or 5 marks, not beyond that. So that means we have to study around 30-35 sections for scoring that 4 to 5 marks. I think logically speaking, is it required? I would say if you want to score good marks, it is required first. And second, if you see the nature of questions, that is important, friends. The nature of questions, they are direct in nature. Direct in nature means direct provisions are asked. Maybe the questions are framed in a case scenario, but there will be no requirement of quoting any relevant case laws, because till date, there have been very minimal cases which have been decided under these provisions. So you will not get any questions which are related to any practical case scenario or practical case laws, but they will be more than hypothetical generated scenarios, which more or less would be direct in nature. So that is the advantage which one should look into for studying the provisions under winding up, because first they are direct. Second, if they are direct, then it is easy for all of us to answer, and you would score around 4 to 5 marks. So two purpose, friends. One, if you want to score good marks, you have to cover the whole subject. But if you are weak on directors, meeting, and other provisions of Companies Act, my suggestion is always, friends, to cover those relevant provisions of our subject where the probability of question being asked will be high and the nature of question should be direct. So if you get these two combination, probability is high. So there is a high probability that a question from winding up will come, and the nature of question is direct. So if you consider both the impact, you have a chance to score good marks. Even if not good marks, but then if you want to score even 45, 50, taking an average of 200 marks, then I think you should cover these topics. So for both type of students who think that I would just want to pass, it is important. For those students who are targeting the rank, this is important. So you cannot ignore that. So let's understand the overview. Friends, under winding up, there could be 3 situations. One is a compulsory winding up. That is covered under Companies Act. This is inability to pay debts where a company is not able to pay its loan to the bank. Then Mr. Viraj, strike off and winding up are different. We'll study both the concept. Strike off will be covered under miscellaneous provision, and today and day after we'll be studying the winding up. So once we cover this topic, probably then you will understand the difference. And even after that, if you're not, then we can discuss it more. So inability to pay debts is covered under IBC. And voluntary winding up is also covered under IBC. But this is covered under Companies Act. So for winding up, in simple meaning, if you want to close down a company, there are three options available to the person. Compulsory, second scenario is inability to pay debts, and third is voluntary. Under this, we will be covering about the process that who can apply for winding up, then the process of winding up, how the company will be wound up with respect to the assets and payment of liability, recovery of assets and payment of liability. Then there are rule provisions regarding specific transactions under during the course of winding up. And finally, there are rules which have been framed. Winding up rules, WN1, WN2 forms have been notified, and there are processes which have been laid down for winding up. So not relevant. We'll be concentrating on these two aspects about the process of winding up and process of specific transactions. So with this overview, please understand that there will be one part of IBC which we'll be covering in June, and one part of Companies Act focusing on winding up. So let's unwind in the sense, try to grasp most of the things by clearing off our mind with a free, open mind, because this is the first time you will be studying how to close down a company. So just let other things go by from your mind and focus on the process purely of winding up. Yeah, Kingfisher Airlines is the case of winding up, but that was under the previous act. Try to understand. We will be studying the new act, the new provisions, and the whole process has been redefined. So as per definition, section 294, 2 subsection 94, winding up means winding up under Companies Act and liquidation under IBC. So they have defined, they have covered both the process under Companies Act and liquidation under IBC. That is the 5 which are very prominent. And then 281 to 285 which are important, and then the smaller provisions. But then 271 and 275 are the basic crux of winding up. So conditions of winding up. Let us list down the conditions of winding up. Who will wind up the company? First thing should be clear, role of tribunal. Tribunal means NCLT. It can be only be wound up by the tribunal. Nobody else can order the winding up of the company except the tribunal. First thing, very clear. Now, when will the tribunal give the order of winding up? When an application is made to the tribunal. See, tribunal on its own will never come, but generally, when you apply to the tribunal, so an application has to be made to the tribunal. Who will make the application? We'll see it later on. By a special resolution resolving that the company may be wound up. So that means a special resolution has to be passed. Then only company can be wound up. On just and equitable grounds, the company can be wound up. Or where the company has defaulted in filing financial statement as required for annual filing, section 92 or other sections. Or annual returns for immediately 5 consecutive financial years have not been filed. Or if the company has acted against the interest of the sovereignty and integrity of India, that is very common, I think, which is very natural. Or on the application by the registrar or any other person authorized by the central government. Situations under which the company could be wound up. Now, I think the third, fourth, and fifth, third and fourth is very clear. They are very specific that the company has defaulted in filing of the financial statement or annual return for immediately 5 consecutive financial year. Consecutive financial year, very clear. So this is an event of non-filing of any document to ROC. You are not giving information to the government. Or you have been involved in any activity, smuggling, trading in equipments which are not in the interest of the sovereignty of the country, or maybe transferring money from here to there for funding of the terrorism in India. So that may be again one of the reasons. What we need to understand by a special resolution and just and equitable, which is again an open thing. Now, why would a company pass a special resolution to wind up? So there may be a scenario where the company thinks that there's no requirement of running the business, or maybe I'm not able to pay the debts. That may be a scenario. But then again, remember, when you're not able to pay the debt, you need to follow the IBC regulation. You cannot come here under the Companies Act. But generally, there's no such business of the company which is being run. So the company thinks that we need to wind up. Or on just and equitable grounds. What could be just and equitable grounds? Just and equitable means which is subjective, which is based on certain facts of that particular company. The tribunal may decide. Just and equitable ground can be a deadlock between the promoters, the founders, the management. There's a case of severe operation going on within the company, and there's a dispute and the minority shareholders are being oppressed. So the tribunal thinks, let us wind up the company. Now, when will this scenario come in? Suppose somebody has filed an application for operation in mismanagement under section 241 to 42. Now, during the proceedings of that particular application of operation in mismanagement, the tribunal feels that there is a severe operation and the company is a fit case for being wound up. So let us start the proceedings of winding up. When the tribunal thinks that it is a bubble company, that means the company is doing some work, but not for the company, but for someone else. There's someone behind this company. It is only a shell company. Therefore, it is required to be wound up. We all understand the meaning of shell companies. They are being formed to hide something actual, which is being carried on behind the scene, but on the front, it is the company which is being promoted to do those activities. Or unlawful activities. It may be in the interest of the country, but then these are unlawful activities. And where the company has lost the substratum, that means for the purpose for which the company was formed, that is not there. That is not in existence. If the MOA, that is the memorandum, has defined certain areas of business for that particular company, now that the company is not running that business, maybe the government has banned that business, or maybe that business is now not required at all because of development of technology and newer things coming in. So there is no such purpose of carrying on the business. In that case, it is just and equitable. So a lot of questions have been raised on this particular point, loss of substratum, which means the purpose for which the company was formed, that does not exist today. So under that situation, you may decide to wind up the company. That is the just and equitable nature. So remember, friends, 5 scenarios which call for winding up of the company. Mr. Viraj, Reliance Communication is under IBC. And I hope just and equitable is clear, Mr. Viraj, now. I've explained what is just and equitable. So what about the creditors? A natural question comes into my mind that what will the creditors do? As I said, all creditors will always have the option of going through the IBC mode and recovery of the amount through the IBC provisions rather than taking the company to the winding up provisions. So the first is 271. Under what scenario the company may be wound up? And second, the important part, very important part, who will submit the petition for winding up? So 271, 5 marks, 272, 5 marks. I hope 271 is clear. I would suggest that while we are studying these sections, you can create your own mnemonics. We all understand what are mnemonics, short forms of your own, rather than relying on my short forms. At wherever I feel that I need to give a short form, I'll give it. But I think when short forms are created at your end by yourself, you will be able to recall things faster. I have highlighted the important word: special resolution, just and equitable, default, sovereignty, or by registrar. These are the important words through which you can create your own short forms. Creditors, I think very clear. Whenever the word creditor comes in, don't go by Companies Act, go to IBC. Who may submit a petition? So there are 5 people in general, though the number is 6, but then third point is common to 1 and 2. The company itself may apply to the tribunal to wind up. Company itself. The company thinks that the company should be wound up. Then by passing a special resolution, remember a special resolution is required. As I said, when there's a loss of substratum, or the company thinks that they are not. Deadlock is a situation where 2 people who are managing the business are not talking to each other. When they're not talking to each other, they are not able to resolve a particular transaction point, how to run the business, and there's nobody to take care of the business, then that is a deadlock situation, where ego is dominating more rather than financial and logical, rational behavior, then there's a deadlock. I hope you understand, Kaushiki. Okay, so the company may itself go and wound up the business by passing a special resolution. The second is very important, any contributory or contributories. For this, we'll again go back to section 245, where 285 will study in detail who are contributory and contributories. In general, contributory means the shareholders. In general, contributory means members. Whoever are liable to contribute to the assets of the company, they are contributory. Commonly asked question in exam, who are contributory? So under this scenario, remember, in general language, if I want to explain in simple words, shareholders and members are contributory. So if you are a shareholder holding shares, a fully paid up share, are you a contributory? The answer is yes, he is holder of fully paid up shares. You are holding shares, but you are holding partly paid up shares. Are you a contributory? The real sense of contributory is people who hold partly paid up shares, because they have to contribute now during the process of winding up towards the assets of the company so that liabilities could be paid off. That is the concept of contributory. But here it is mentioned that if a petition has to be filed, a petition can be filed even if that person is holding fully paid up shares. Fully paid up shares. And as we said, as we understand, they have to contribute to the assets of the company. Even if the company does not have any assets, then also you will be eligible to file an petition. And even if the company does not have any surplus asset after distribution, if you think so, then also you will be entitled to file the petition for winding up. So contributory, we will define it under section 285 again. Difference between member versus contributory is very important. Members are people whose names are appearing in the register of members as of today. Contributory are members but may include other people also who are not members today. That will study in 285. So here, remember the word contributory, who are contributory, and the role of contributory is that a petition can be filed by them, provided the shares in respect of which is contributory or some of them were either originally allotted to him or, very important, have been held by him and registered in his name for at least 6 months during the 18 months immediately before the commencement of winding up. So that means he must be holding that shares for at least 6 months during the 18 months immediately before the commencement of winding up. So if he's holding a share less than 5 months, then he cannot file a petition. Now this 6 months is not given that 6 months should be in continuous. So maybe for a period of 18 months, he may be holding share for 1 month, then he may sell, then he can again purchase it, hold it for 4 months, again sell, and then again purchase it and hold it for 2 months. So that means total would be 7 months. Then he is eligible to file a petition. Or third situation where the shares have been devolved on him through the death of a former holder. That means on account of a will, the shares have been devolved on that particular person. Then he can be a petitioner. Mr. Viraj surrendered deadlock with the shareholders of board proceed for winding up. Yes, as we understand that under deadlock situation, anybody can file an application. So filing an application, it can be the company, it can be the shareholders. Both can approach. Both can approach. So important, what we need to understand under 272, who are contributories, the definition of the contributory, then specific scenario that they will be entitled even they are holder of fully paid up shares, no surplus assets and does not have any asset, and the conditions of a contributory. These are the 3 conditions. So normally asked in the exam. Then third, the register. So third is all or any of the persons specified above. So it can be in combination also. Not necessarily only one contributory can go. So it can be a combination of all the contributories coming and then applying in the NCLT. So third is the registrar. Now registrar, when during an investigation under 210 and 212, if you have studied the chapter of investigation, 210 and 212, where the investigation is carried on and during the investigation, the registrar feels that it is required to be wound up, then application can be made. So why I have mentioned that 210 and 212? Because we need to understand how will the registrar come to know, that they have to file an application for wind down. So obviously one is a scenario because they can observe that the company is not filing the annual returns. That is a very natural scenario. So the registrar knows about it. Or during that investigation, he will come to know certain things about the company. So then only he can go and apply for the winding up. Otherwise, out of the blue, he will never come into picture and then apply for winding up. Yes, so Janvi, it is not necessary to hold shares for the 18-month period. Within that 18-month period, any 6 months will do. And from which date 6 months will be counted? In case the commencement is 1/5, let's say. Before the commencement of winding up, let's say your winding up date is 1/5/2023. So we'll go back 18 months from this particular date. So 18 months is 4 months of this year, 12 months of the previous year, and 2 months of 2021. That is from 1st November till 1st May. 1st November till 1st May. If that person is holding the shares during this period of 1st November to 1st May for any 6 months, for at least 6 months, not in continuous, remember. So from 1st November till 1st May, he is holding shares for at least 6 months during this period, then he is entitled to file and petition. Is it clear? So registrar shall be entitled to present winding up under section 271 except for clause A. Now, what is that clause A? Where a special resolution is required. So registrar cannot pass a special resolution. So obviously in that scenario, only the company can do that. So except that scenario, then any other scenario, registrar can file an application. But prior permission is required from central government and he has to give an opportunity to the company that is going to file a petition for winding up. Do you want to say something? So this is a specific condition attached to a petition by registrar. Specific condition, prior permission of the central government and opportunity to be heard to the company. So this please note down an exception condition in case the registrar is going to file a petition. Again, as I said, when will the registrar go? Scenarios when the company is not filing return, or let's say under 210, 212 investigation has been carried out, and during the course of investigation, the registrar comes to know of certain facts, then he can file a petition. Yes, absolutely correct to Mr. Sriram that how can fully paid up shareholders be called as contributories? So practically speaking, they will not be called to contribute any amount in the process of winding up. But in general, they have the right to file a petition for winding up. That means you are not taking away the right of a shareholder to file an application, but you are giving the benefit to them that they can apply for winding up and they will not be called for any amount because they have they are holding fully paid up shares. Otherwise, you are penalizing the people who have paid full amount by taking away a right from them for filing of winding up. Try to understand, it will be not be justified for them that you are taking away certain benefit only because they have paid the full amount. But you are allowing a people who have not paid the full amount and they can take the company for winding up. And remember, a member who is not paid the full amount, why would he take a company for winding up? Because he knows that once the company is taken for winding up, he can be called for contribution. You understand, Mr. Shriram? That is why this right has been given to fully paid up shareholders also. Janvi, the relevance of 18 months is that if that 6 months has to be counted, now 6 months has to be counted from which period? So there has to be a cutoff period. If you don't give a cutoff period, then during the life of the company, any person who has held the shares for 6 months, then he can be counted as a contributory and then he can come. So therefore, a cutoff period has been given. Otherwise, a company which is a 20-year-old company, any person during that particular 20-year period has held the shares for 6 months, he can be termed as a contributory, which will not be justified. Is it clear, Jan? That first number has been calculated based on this 18-month criteria. So there are two things which we need to remember, friends. 271, under what scenario? 272, who can file? So we understood the company by special resolution, contributory, registrar, any person which the central government authorizes in that behalf. And in case of falling under section B, that is 271B, then by central government or state government, both can come. That is just an equitable ground. On just an equitable ground, the central government or state government, both. Fifth is only by the central government, but by a person authorized by central government. Sixth is the power is given to both the central government and the state government. Now, remember, whenever a central government or state government has to apply, they will authorize a person only. Now, very important, when a petition is presented by the company, the petition should be accompanied by SOA, Statement of Affairs. And that format of SOA is given under the winding up rules, that how that Statement of Affairs has to be submitted. So there are certain conditions attached to each person. For registrar, prior permission. For SR, by the company, a statement of affairs. For winding up, these are the conditions. By winding up by the contributory, then these are the conditions. So for each particular person, there are certain conditions attached. So please do remember all these conditions. Statement of affairs is nothing but primarily what we understand is a balance sheet, assets and liabilities. Now, whenever we are filing an petition, Viraj, I explained who are contributory. As I said, contributory are people who are the shareholders of the company, members of the company. But generally, if you want to understand contributory, that means who are liable to contribute to the assets of the company in the case of winding up. So, example, people who hold partly paid up shares, they are liable to contribute. That is the general way of understanding. But even the fully paid up shareholders are also termed as contributory as per law. And even in the scenarios which we'll study in 285, past members can also be termed as contributory. So contributory means members and past members also, which generally means current members whose names have been registered in the register of members, and those people under specific scenario, past members also. So whenever a petition is being made by the company, then the copy of petition has to be filed with the registrar, and the registrar has to submit his views to the tribunal within 60 days. That okay, it also agrees with the petition. There is no such problem that the company can be wound up. So this is also important, that a report or views of the tribunal are taken. So 271, 272, prime section for winding up. No, Viraj, preferential holders cannot be a contributory. Shriram, try to understand. Before the liquidator can take up all the responsibility, the tribunal has to give an order, and the tribunal will only give the order once the application is made. So the step number 1 is contributories coming together and making the petition. Then only the picture of liquidator will come. Otherwise, liquidator will never come into action. So when the contributory are of thinking that yes, once the company is taken into winding up, probably they will never have the right. But let us envisage a scenario, let us visualize a scenario where the company has certain assets today, and the contributories think that if the company is wound up and assets are sold off, then probably whatever amount is realized, that will be enough to pay off the creditors and also to the shareholders. Or if not to the shareholders, at least the creditors will be paid off. And as a contributory, I will not be called for making any contribution towards the assets of the company. So it is better that I should apply today for winding up the company rather than wait for some time till the value of assets deteriorates, and then maybe I will be held liable to contribute to the assets of the company. So under this scenario, imagine that the proper logical thinking should be to take the company for winding up. Is it clear, Mr. Shriram, that why would a contributor take the company towards winding up? Okay, so friends, 271 scenario, situations, 272 who, 273 what will tribunal do? Scenario, who, and order of tribunal. Scenario, who, and order of tribunal. So what will tribunal do? Dismiss the order. That means they can dismiss the application. With or without cost means they can attach a cost in the order that 2 lakh, 5 lakh, 10 lakh cost is attached because the application was wrong without any thinking, and therefore they have wasted the time of the tribunal and so many other people. Therefore, I order a cost. Conditions, I did not understand, Viraj. What is your question? I think we have discussed the condition 272. If then only they can apply. So there are certain conditions, as I said, with respect to each of the person. Is it clear, Mr. Viraj? So orders of the tribunal. First is do not admit the company, dismiss the application without or without cost. Second, they can make an interim order. Okay, till the tribunal takes the company for winding up, till I give a final order for winding up, let me give an interim order with respect to, let's say, resolving a dispute, so that it may not be required to give a winding up order, or appointing, let's say, disposing of certain assets for meeting out certain things. Or let's say a fraud is being committed, then order an investigation to find out if there's a fraud, and then the tribunal can give an order. So whatever the tribunal thinks that it is required that before I take a final decision on winding up, I need certain more things, so they can give an interim order. Or the tribunal thinks till the time I finalize the order of winding up, it is important that a person should be appointed to take care of the assets. So let me appoint a provisional liquidator now, so that he will take the affairs of the company, because the management is not working properly. So he may appoint a provisional liquidator, or they may directly give a final winding up order, or any other order as it thinks fit. It's a residuary clause. So these are the 5 situations, 5 things, outcome of your application. 5 outcomes of the application which you are making to the tribunal. That we all understand, which is very logical. Either the application will be rejected or accepted. So this is rejected, first scenario. This is accepted, second scenario. In between, there are 3 situations. You give an interim order, other order, or a provisional liquidator can be appointed. All this has to be done within 90 days. All this has to be done under 90 days. Is it clear? Now, before appointment of a provisional liquidator, the tribunal will give a notice to the company and afford a reasonable opportunity to make its representation, if any. So question comes, who can be a provisional liquidator and when can provisional liquidator be appointed? Who can be a provisional liquidator and when can a provisional liquidator be appointed? So now the whole situation will shift. From tribunal now to the process of winding up. Now, what are the grounds under which the tribunal will consider the winding up process? What will tribunal think? Obviously, we cannot question the minds of our honorable judges, But still, there are certain points which have been given where tribunal should consider those points before giving an order for winding up. The tribunal will not refuse to make a winding up order only on the ground that the assets of the company have been mortgaged for an amount equal to or in excess of those assets, or that the company does not have any asset. That means nobody can come and raise a point that the company does not have any asset, or the assets of the company are being mortgaged to a bank. That means the banker cannot come and raise an objection that I have a mortgage against the assets, you cannot order a winding up. No, you cannot stop that process of winding up only because of this particular transaction. No, I think, Janvi, as we mentioned that in practical experience, always an opportunity of being heard is given to the company. If it's a petition by the registrar, remember, registrar first has to give an opportunity to the company. Then remember, the copy of petition has to be filed with the registrar. So if an contributory is filing a petition, then the shareholders know about it. When the company itself is filing, we all understand company knows about it. So it's a scenario where the central government can apply. Then there might be a situation where there's no such provision of informing to the company. But as we have discussed that before appointing a provisional liquidator, the tribunal shall give a notice to the company and afford a reasonable opportunity. That means proper time will be given to the company for being heard. Okay. So one scenario has been very specific, that a banker cannot come and object to the whole process. Then second, where a petition is presented on the ground that it is just and equitable, that the company should be wound up, then the tribunal may refuse to make an order of winding up if it is of the opinion that some other remedy is available to the petitioner and they are acting unreasonably in seeking to have the company wound up instead of pursuing the other remedy. Example, dispute between promoters. So when the winding up, when the tribunal thinks that the promoter can sit and resolve the matter, there is no such reason that they should keep on fighting for small petty matters. Then the tribunal may make an order for other remedy on just and equitable ground. So remember, other order as it thinks fit. 5 types of order. So any other order which the tribunal thinks fit. When they think that why they are coming and fighting for small matters and then taking the company towards winding up, will order a resolution. They may appoint an arbitrator. They may appoint a mediator to resolve this whole process so that the company can keep on running. So these are certain specific scenarios which have been given, specific direction has been given to the tribunal that these cannot be the scenarios for winding up the company, or this cannot be a reason for not taking the company towards winding up. Direction for filing statement of affairs. Very important. Once we have seen that when the company is itself going for winding up, they have to file a statement of affairs. That is must. Without that, the application is incomplete. But what under the scenario where the contributories have made an application, where the registrar has made an application, where the central government has made an application, then under that, where winding up petition has been filed by any other person other than the company, and the tribunal thinks that the company may be wound up, then tribunal shall make an order to direct the company to file its objection along with statement of affairs within 30 days of order. Janvi, I think your question is answered out here also, that if there is an objection by the company, if they want to raise an objection, they can raise the objection out here. But they have to file a statement of affairs of the company within 30 days of the order, and it may be further extended under special or contingency. So what if the directors say, oh, I'm not interested, I would not file my statement of affairs. Who cares about it? Why should I do that? Then, if you are not filing the statement of affairs, you forfeit the right to oppose the petition. And then natural, they will be liable to punishment, maybe which is a monetary punishment. But more important is that now you cannot come and object the petition now. You cannot do that. So therefore, statement of affairs has to be filed. Along with that, the directors and the other officers of the company within a period of 30 days of such order submit at the cost of the company the books of account completed and audited up to the date of order to such liquidator and in the manner specified by the tribunal if the order of winding up is under section 273(1)(d). So if under a section of 273(1)(d), that means when the application is made by the registrar and the central government, then the tribunal, once they give the order of winding up, they have to present an audited statements or audited books of accounts to the liquidator, within 30 days, within 30 days. Contravention, general provision, as we understand that if there's a contravention of the provision, who shall be default shall be punishable with imprisonment for a term which may extend to 6 months, and monetary which should not be less than 25,000 and extend up to 5 lakhs. Difficult to recall all these monetary provisions, but somehow you have to learn sometimes. And if you want to file a complaint, then the complaint can be filed before the special court. Remember, by the registrar, provisional liquidator, company liquidator, or any person authorized by the tribunal. So all decisions will be taken by the special court. So the process of ordering a winding up is over. Ordering the winding up is over now. And now we move on to the process now, that how this winding up process will be carried. Now, as soon as the winding up is ordered, the tribunal, Kaushiki, the complaint is that directors not filing the return, directors have not submitted the audited accounts. So these are the complaints. Or any other complaint, maybe the directors are not supporting. So when it comes to winding up order and a liquidator has to be appointed. Now in general, there are 3 types of liquidator: provisional liquidator, company liquidator, and official liquidator. These are the 3 terms which will be used. Provisional is for, let's say, 30 days, 2 months, 3 months, as the tribunal may order. Company liquidator, if the company is taken directly to winding up, then there's no need of appointing a provisional, and the tribunal will order a company liquidator, will appoint a company liquidator. And there are people who are known as official liquidator. who will come into the picture as a part of a committee. Now, who can be a provisional liquidator or a company liquidator? Remember, people who are termed as insolvency professionals, they can be appointed as a provisional liquidator or a company liquidator. While official liquidator is a person who is a part of the government. They are on the rolls of the government. So this is a separate person from these two. So under the winding up order, the court will appoint the insolvency professional as a provisional liquidator or a company liquidator. So let's say if a fraud is expected and then the tribunal thinks that there may be a disposal of asset, fraud may be committed to the till the time I make a final order, let me appoint a provisional liquidator. Who will be that? Out of a panel maintained by the IBBI board, Insolvency Bankruptcy Board of India. They maintain a panel, and from that panel, the person will be selected. And even the company liquidator will be selected from the panel. Now let's say the tribunal has appointed a provisional liquidator for 2 months. And after 2 months, the tribunal gives an order of winding up. Then the tribunal may appoint a provisional liquidator as the company liquidator. So provisional liquidator can be a company liquidator. That is the question. So please remember, provisional liquidator can be a company liquidator, and the company liquidator may be different from provisional liquidator also. Not necessarily that he has to be the provisional liquidator. There can be someone else also. I hope this is clear. Along with that, the tribunal can give specific powers, pass orders which restrict his power as a provisional liquidator. And the terms and conditions of the appointment of provisional liquidator and the fee payable to him may be specified by the tribunal on the basis of the duties, experience, performance, qualification, and the size of the company. So what are the powers of provisional liquidator? The provisional liquidator will have the same power as a company liquidator until and unless the tribunal limits his powers. So he will be acting as a company liquidator until the tribunal says that please do not include these within your duty. And the fees, as we said, will be decided by the tribunal. So if there's a provision of appointment, can there be a provision of removal? The answer is yes. Why not? If somebody can appoint, if tribunal can appoint, can the tribunal remove him? The answer is yes. Grounds of removal: CFID, misconduct, C, fraud committed by that person, then professional incompetence or failure to exercise due diligence, D, not exercising proper analytical tools. As a insolvency professional, you have to apply certain normal vigilance duties, then you are not complying with those provisions, or they are unable to act. A is for act. That means whatever duties have been given under this provision, you're not complying. Let's say you have to submit a report within 60 days, you're not submitting. You have to conduct certain activities you are not conducting. So you fail to comply with the provisions of the act, or there is a conflict of interest or lack of independence. That is very common. So under these grounds, the liquidator may be removed. Two 7 talks about the basic process to be followed by the liquidator. Basic process to be followed by the liquidator. 277. Now, once the tribunal gives an order for appointment of provisional liquidator or winding up the company, he has to be intimated within 7 days. He has to be intimated within 7 days, plus intimation has to be given to the ROC within 7 days. Or if a winding up order has been given, then the company liquidator has to be intimated within 7 days. And ROC has to be intimated within 7 days. So the order of tribunal will go to the liquidator within 7 days and ROC at the same time. The ROC will record the same and then maybe given public ad notified in official gazette. This company is now gone into winding up. And if the company is listed, the same will be informed to the stock exchange. The same will be informed to the stock exchange. This particular order will be a notice of discharge to all the officers and the employees of the company, except where the company is running, when the business has been carried on, probably in that scenario, they may not be discharged. So what are the effects of the order? That is the question. So the effect is that the intimation has to be given, ROC will record the same, notify in the official gazette, inform the stock exchange, discharge to the employees. Now, once this order is received by the liquidator, what will the liquidator do? So within 3 weeks, now a lot of timelines, that is the biggest challenge under this whole process. And as a liquidator, you have to be on the toes always, because you have to keep on complying with the various provisions from time to time. Within 3 weeks from the date of passing of the winding up order, the company liquidator shall make an application to tribunal for constitution of a winding up committee. Now, there's a new term which has been coined in, that they have to, the liquidator shall make an application that I have constituted a winding up committee to assist me and monitor the progress of liquidation proceedings by the liquidator. So they will monitor the process or the activities of that is the liquidator. And the winding up committee will comprise of official liquidator attached to the tribunal, nominee of the secured creditors, a professional nominated by the tribunal. So here again comes the power of tribunal, that they will appoint an official liquidator. As I said, official liquidator is a person who is a person of the government. They are recognized official liquidator, and for each state or each particular region, there is an official liquidator designated by the government. So the tribunal, each tribunal has an official liquidator, and a tribunal may appoint a professional also nominated by the tribunal. Professional can be a chartered accountant, company secretary, or advocate, or any other person. So normally 3 people comprising of the winding up committee who will assist and monitor the progress of the liquidation. Now, what will the company liquidator do? Primarily, he will be the convener of the meetings of the winding up committee, and his job will be to take over the assets, examine the SOA, recovery of the property, cash or assets of the company, review of all the audit reports, sale of assets, finalization of the list of assets, creditors and the contributories, compromise, abandonment and settlement of all the claims received, payment of dividend, and any other function which the tribunal may direct from time to time. So I think functions are divided into three parts, remember. Taking over the assets, realization of the assets, paying of the liabilities, and then review of the affairs of the company. That is important. Taking over the assets, realization of the assets, paying of the liabilities, and the review part. Then more responsibility being casted on the liquidator shall place before the tribunal a report along with the minutes of the meeting of the committee on a monthly basis, duly signed by the members present in the meeting for consideration till the final report for dissolution is submitted before the tribunal. So he has to submit a report to the tribunal along with the minutes of the meeting of the committee. And till the final dissolution application is filed, he has to do it continuously. And finally, the liquidator will prepare a draft final report for consideration and approval of the winding committee. And once that final report is approved by the winding committee, that shall be submitted by the liquidator before the tribunal for passing a dissolution order. So the end result of this winding up is a dissolution order. Before that dissolution order is passed, a report will be submitted, which will be passed by the winding up committee. Before that report is being submitted, he or she will continuously keep on informing the tribunal along with the minutes that what are the activities, and these are the activities. This is in crux the whole process of winding up. In short, the whole process of winding up. Yes, Viraj, why not? He shall be liable to pay all the statutory dues. If the company is running, and there is a liability of GST, income tax, TDS, whatever, he has to comply with all the regulations. But I believe that under winding up, you will not find any company which is running. Running in the sense, there will not be much of liability of GST. Obviously, he has to file the income tax return, that is for sure. But if there's no income, there's no liability of tax payment. But yes, income tax return, deduction of TDS, he has to comply with all these provisions. So winding up committee, we have seen that who will be constituting the winding up committee. And who will head the winding up committee? Just 1 second. Yeah. And the job of the winding up committee. So I'm not going to discuss this again. Effect of winding up order. Effect of winding up order. So what is the effect of winding up order? The order of winding up shall operate in favor of all the creditors and all contributories as if it had been made out of on the joint petition of creditors and contributories. Remember. Which means that if one person has made a petition, then the other people cannot come and object on the same once the winding up order has been given, that the petition was not made by me, so I will not be part of this whole process. So even if two people come and file, it will apply to all. Very important, the concept of moratorium. The concept of moratorium. Where no new suit can commence on the company. No new suit can commence on the company. And the pending suit, the pending cases which are there can be continued only after the leave of tribunal. That means you have to make an application to the tribunal that I want to continue my case. And the tribunal will say that, yes, this case can be continued. And that application will be disposed of by the tribunal within 60 days. But it shall not apply to any proceedings pending in appeal before the Supreme Court or High Court. Remember, these provisions will not apply to any proceedings which are pending in appeal before the Supreme Court or High Court. So that is an exception which is given. Jurisdiction of the tribunal. Now, jurisdiction means what? The jurisdiction would be to entertain or dispose of any suit or proceeding by or against the company, any claim made by or against the company, including claim by or against the branches of the company in India, an application made under section 233, or any question of priorities of law or facts that will be decided by the tribunal. So you can leave this particular section, 280, jurisdiction not at all relevant. Now, this is one of the most important parts of this whole value. Report of the liquidator. Report of the liquidator. The biggest responsibility of the liquidator is to prepare this report. Quite commonly asked question in the exam. Report of the liquidator. Now, try to visualize the job of the liquidator. He has to create a winding up committee, right? Then he has to convene a meeting of the winding up committee on a monthly basis, submit the progress report to the tribunal for the same. He has to collate all the assets, call for the claims, compromise, abandon, or accept the claims. And within this whole process, he has to prepare this liquidator report within 60 days. Within 60 days. And the report will consist of what? So I have classified the report under 4 parts, which primarily is nothing but a balance sheet. Though he does not have to submit the balance sheet, but the constituents of balance sheet will be reported by him. So asset, liability, capital, and others. So he has to give a report on the details of the asset. Let's say fixed assets register and the current assets, every asset, cash and bank balance, all investments, everything. Based on, very important, the value, he has to mention the value of the assets based on report from a registered valuer. That means within 60 days, he has to appoint a registered valuer and also take a report of registered valuer. Based on the report, he has to assign a value to all those assets, not the book value. Right? So that's a tough job. That 60 days are very critical for the company liquidator. He cannot skip any movement, but totally focused on this whole process. The second part is the capital, issued, subscribed, and paid up. Third part is the liability, which includes all existing as well as contingent liability, segregating between secured, unsecured, and so on. Then amount due to the company, that is debtors, loans, advances, guarantees, list of contributories and dues, if any, payable by them, and details of unpaid call, that is the capital part. List of all the contributories, remember, very important. Again, we'll come to this word contributory under section 245. And again, the asset part of details of intangible assets. And then in others, any contracts, joint venture, collaboration, legal cases, or any other information which the tribunal may direct. So 4 parts of this whole report: assets, liabilities, capital, and others. So basically, it's a summary of the current state of affairs of the company. One is given by the management, statement of affairs. On similar pattern, even the liquidator has to give within 60 days. So maybe it is just a replica of what the management may have given, but yes, taken from a third party again. Taken from a third party, that is the liquidator or the appointment person whom the liquidator is appointed. Yes, Mr. Viraj, that's the biggest challenge. Who will hold the documents as mentioned in the Company Income Tax Act? So it will be the responsibility of the liquidator now. Now, along with that particular report, the company liquidator, this is the second part of the report. One is purely the asset, liability, capital. The second part, he has to shall include in his report the manner in the company was promoted or formed, and whether in his opinion any fraud has been committed by any person in its promotion, formation, or by any officer of the company. So if you see the current environment, there were a lot of companies which were formed. That is why there was a current change in the PMLA Act, Prevention of Money Laundering Act, where things have to be ensured that the formation of the company was correct. The registered office was there. The people who are part of the memorandum subscriber, they are there. They're physically present. And there's no third person behind this whole process. So he has to analyze that and also give in this report. And if the company is running, he has to make a report on the viability of the business. Imagine a liquidator has to understand the business and then give a viability. Not possible. But then what he will do, he'll appoint a person who will understand the business and give a viability report. And the liquidator will form his opinion based on that particular report. So he has to give opinion on the fraud and the formation of the company and on the viability of the business. So liquidator, remember, multiple jobs. We'll see more jobs coming in front of him. But till now, winding up committee and a report under section 281. Primarily two major jobs till now. That report will be given to the tribunal. That report will be given to the tribunal. And the tribunal will, based on the report, fix up a time limit for completion of the entire proceedings. And if required, may need to revise time limit for economical reasons. After hearing the company, liquidator, creditors or contributories may order for sale of company as a going concern or its parts or thereof, or its assets or part thereof. And if in the order, if in the report, the liquidator has mentioned something about a fraud, then the liquidator may report that a fraud has been committed in respect of the company. The tribunal shall, without prejudice to the process of winding up, order further investigation under 210, or they may direct the company liquidator file a criminal complaint, special court. Complaint at the special court. Now you understand the relevance of this and 210. 210 gives them power to conduct investigations. Linking 210 and here, official liquidator appointed a forensic auditor. The report of auditor unearthed certain fraudulent transaction and the same was part of the liquidator report. Please highlight the next course of action to be taken by the respective authority for determining a case against the company, against the directors of the company. So here the process would be what? 281 report, 282 order by tribunal, 210 investigation, and 223 and 224 are orders again. Based on the investigation conducted, 223 orders will be given by the tribunal, 224 orders will be given by the tribunal. So this is the sequence to be followed. So 210 is triggered based on 281, based on 282, 282 is based on 281, and final outcome is under 223 and 224. So how a question can be created by linking two separate chapters, investigations and winding up. Investigation and winding up. This will be the height of making the paper tough. Whereas the fees, the remuneration will be decided by the tribunal or by the winding up committee, and it will be part of the winding up cost. It may be contributed by the secured creditors. The tribunal may order the secured creditors to pay that amount, and this amount may be recovered by the secured creditors on the sale of the assets. On the sale of the assets. See, Kaushiki, remember, monthly report is the monthly progress. 281 is a compulsory report which has a specific format. Monthly report does not have a format, but 281 has a specific format. Dissolution report is the last stage. Once this whole process of 281, relation of assets, distribution of the amount, everything is done, then the dissolution report will be given. So progress report, 281 report, and the last report will be the dissolution report. Custody of company's property. In general, I think the custody will lie with the liquidator. And remember, tribunal can give any direction with respect to those properties. So not going to details of this particular section, 283. Only thing is the liquidator will have the custody or control of all the property, effects and actionable claims. Remember, the custody will be deemed to be in the hands of tribunal through the liquidator. It will be in the custody of the tribunal through the liquidator. Now, few examples of assets. There are certain assets which are mortgaged to the bank. Those assets will come here. There are certain assets which may be with the employees. Employees are living in company quarters. Some of the assets are lying in the quarters. Those assets will come under the tribunal and the custody of the liquidator. Unpaid amount on the share capital, that will also be part of this asset. So these are few examples which will constitute the assets also. Further directions are given to the director. Where did I mention subsisting contracts? Did I mention somewhere? No. Okay, it must be on the some slide. Is that so? It means, any contract agreement to which the seller is a party, or which where the seller is bound to any assets of the company. The seller assets are subject to certain agreements. See, subsisting in legal means it will continue to exist. So all contracts will continue to exist. That is the meaning of subsisting contract. It means they are enforceable, valid. I hope it is clear. Namrata, is it clear? Subsisting contract means it is enforceable, they will continue to be there. (284) is a general direction to the directors that they need to support this whole process. And if you don't comply, don't support this whole process, then you will be subject to imprisonment and penalty both. We have to extend full cooperation. We come to section 285. 285, which I've been mentioning since beginning. The list of contributories and application of asset. One of the very important section of this whole process of winding up. So tribunal, for a change, they have been assigned certain responsibilities, duties. Though very difficult to do that, but anyway, just on the lighter part. So after winding up order, the tribunal has to settle a list of contributories. Settle a list, that means they have to create. Now, who will create? Obviously, the liquidator will present that list of contributories. And if required, cause a rectification of register of members in all cases where rectification is required. maybe the current register of members do not reflect the current membership, because there might be people who are not in this world so far, but then the shares have not been transferred. So all these rectification will take place if the tribunal orders so, and shall cause the assets of the company to be applied for discharge of its liability. So tribunal will obviously, that is the whole objective, but then they will ensure, they will say that all the assets should be applied for discharge of the liability. But for us, the important part is the settlement of the list of creditors, contributors, sorry. Now, the list of contributors will include those people who are liable to contribute to the assets for payment of liability and the cost of winding up. Those who are liable, not necessarily they have to pay. If the assets are sufficient enough, they may not be called to pay, contribute. But at least the list should be ready, who will be liable to contribute to the assets of payment for liability and the cost of winding up. And also for adjustment of right among themselves. Now, what does this mean? List will include all those contributors for adjustment of right among themselves. For, let's say, there are two classes of shareholders. Rupees 10 paid up, rupees 5 paid up. So this is one list. This is second list. So to bring them at same level, logically, and this list will include these people, rupees 5 paid up, that they will be called to pay 2.5 rupees to be paid to this class of shareholders, so that their amount is 7.5 and their amount is 7.5. Both are adjusted to the same rights now. So people who have the list, remember. The NCLT may think that the list may not be required, or they may also that the list is required, and also they need to include list of past members to contribute to the debts and liabilities of the company. First thing, the list is not required at all. Under what scenario? When they think that the assets are enough to pay off the liabilities, not at all required. How will they come to know about it? Remember, report of liquidator. It mentions the valuation of the assets, the amount of liability, and when they find that these are enough, so I don't need to prepare a list of contributors, let's dispense with the list of contributors preparation. Or if they think that no, it is not enough, and even the current list of contributors may not be enough to pay off the liabilities, so they will include list of past members. Now you would be surprised, sir, how can past members be part of this list? The answer is yes. The law provides for including the past members to contribute to the debts and liabilities of the company. By definition, section 226, let us understand the word contributory. Contributory are those people who are liable to contribute to the assets of the company in the case of winding up, meaning members are contributory. Simple meaning, definition, contributory are those people who are liable to contribute to the assets of the company in the case of winding up. So, current members and past members who are holder of partly paid up shares, current members and past members who are holder of partly paid up shares, and also current members who are holder of fully paid up shares. Without liability, but will have a right as a contributor. But will have a right as a contributor because at last the amount will be distributed to the contributor. So he should have a right towards that contributor also. So any current member who was holder of partly paid up shares, or any past member who was holder of partly paid up share, they are part of the contributory list, and the current member who are holding fully paid up shares are also part of contributory list. So this list will consist of two lists, A and B, present member and past members. And who are past members? Past members less than 1 year. Who were members of this company with less than 1 year. Yes, Kaushiki, that's what the law says. But only under a condition. They are only liable when the present members are unable to pay. Whereas if they are not paying the amount, obviously whatever the consequences the law says, that will apply. So by law, they have to pay the amount. They are part of this contract. So if they violate this contract, because when you have purchased the shares, when you're holding the shares, you are a part of this contract. So if you violate that contract, obviously the consequences will apply. But remember, past member is only liable when the present members are unable to pay. Liable only to the amount, unpaid amount if limited by shares. And they are not liable for any debts after he ceases to be a member. So that means a company has raised certain debt. For example, a company went into liquidation, liquidator find that the assets are less than liability. He calls on the contributors to including the past members as per list B to contribute to the assets. The past members object to such request and say it is not as per the provisions. Is the contention of the past members tenable? Not tenable. They have to pay as per this section, subject to that they are members for the last 1 year and they are not liable to pay for any debts after he has ceased to be a member. That means if a company has taken a debt after he ceases to be a member, to pay off that particular debt, cannot be called. But for any debt which was outstanding when he was a member, he can be called to pay that amount. So another example for the date part, he receives a notice to deposit 30,000. The order was done on 14/6/2019. He ceases to member 13/11/2018, which is lying within 1 year. So that means Mr. Khurana can be called to pay off that particular amount, contribute to the assets. So he cannot object to that particular notice. Another example, A was a member of company on 31/3/21 and he has paid 5 rupees on the face value of 10. Final call was made to the member and his shares were forfeited and the shares were issued to the new shareholder. Discuss the various situation. The new shareholder had paid 5 rupees. Right? That means now shares are fully paid up. This is not partly paid up. But the new shareholders paid only 3 rupees. So once they are now fully paid up, there's no such reason that they can be termed, they will be called to contribute to the assets of the company. But because the new shareholders paid only 3 rupees, the notice will be given to the new shareholder to contribute to the assets of the company. And when they are unable to pay the amount, notice will be given to A also. If the winding up order was done within 1 year, that is by 31 March 2022, if the winding up has started, then A would be liable to the extent of 2 rupees because the new shareholder has only paid 3 rupees and now is not able to pay that remaining 2. So therefore, A is liable to pay that 2 rupees, but only to set off the liabilities which was existent on 2021 and not for any loan which was taken after 2021. up to only the amount which was not paid, only to the extent it was partly paid up. Mr. Shriram, only which is lesser, uncalled amount on his shares, because his liability is limited. Right? So here we take a short break, and after this short break, we'll again resume and conclude today's session. A short break. the provisions are clear. Any confusion till now, any doubts till now? I always say that if I ask any doubts till now, probably not many participants do respond, because I understand that the confusion only comes in the exams. Otherwise, we are all clear with everything. So, yes, Kaushiki, you have raised a point which is related to IBC. I think as a home buyer, we need to file our claim to the IRP, and the claim has to be submitted within a specified time period. So I would request you that you file your claim to the IRP, and let us wait for the resolution process to be carried forward by the IRP. And I'm sure as a home buyer and as a real estate company, there will be some resolution for you and your family. Okay, so we have understood who is a contributory and the role of contributory, whether past normal question which is asked in the exams. Can a past member be a contributory? So the answer is yes, past member can be a contributory. So obligations of directors, in case of a limited company, any person who has been a director whose liability is unlimited, he will be liable to make further contribution as he was a member of an unlimited company. So normally his liability is unlimited, but if he has ceased to hold office for a year or upwards before the commencement of winding up, probably he shall not be liable to make any further contribution. Then for any debt which has been raised after he ceased to hold office, he will not be liable for that particular amount. So normal, I think, not at all relevant from exam point of view. So for exam sections, please remember what are important, which sections are important for exams. 271 is important. 272 is important, just revising. 273 is important. 275 is important. 274 and 275 both are important. 281 is important. 285 is important. 281, 282 and 285. 281, 282 and 285. Advisory committee. Now this is another committee which comes into picture. So we had the official liquidator, we have the winding up committee, and now we have the advisory committee. The purpose is to advise the company liquidator. Along with the winding up committee, is there to advise the liquidator and to report to the tribunal on such matters as the tribunal may direct. How it will be formed? Appointment of company liquidator. Then a meeting of the contributory and the creditors to be convened by the company liquidator within 30 days of winding up. So another meeting. Remember the challenge with the official liquidator, not the official, with the company liquidator, 60 days report, winding up committee. And here we have another committee, the advisory committee, and that is all to be done within span of 60 days. So we will call the meeting of the contributory and the creditors. Then he will prepare a list of persons willing to act as a member of advisory committee and submit the list to the tribunal. So the composition of advisory committee will be 12 members. Members can be contributories, creditors, or any other as directed by NCLT. And chairperson shall be liquidator. Chairperson shall be liquidator. The advisory committee shall have the right to inspect the books of accounts and other documents and assets and the properties of the company under liquidation at a reasonable time. At a reasonable time. So the major job is to advise the company liquidator, and the right is to have the access to the books of accounts and other documents and assets of the company at a reasonable time. Example, the winding up process is initiated against Kohli Limited and advisory committee is formed by the tribunal consisting of 13 members in order to advise the company liquid. Is it correct as per Companies Act? The answer is wrong. 13 is not the required number. We should have 12 members. Members can be contributory creditors and either directed, any other as directed by NCLT. Remember, winding up committee will consist of whom? The winding up committee will consist of the official liquidator, any professional, and then nominee of the secured creditor. 3 people. Here we have 12 members. 12 members. Though at times the job may be overlapping. Then 288 casts a responsibility on the liquidator to file a periodical reports to the tribunal and in any case make a report at the end of each quarter with respect to the progress of the winding of the company. So progress report has to be filed by the company each quarter. Then the tribunal has the power to review the application and review the orders made by it earlier. For example, extending the time limit. That is the main order which may the liquidator may ask for. Exclusive channel. Exclusive. So let us see how much you have grasped and answer these few questions. Following persons have the right to inspect the report submitted by the company liquidator and take copies thereof or extracts thereof on payment of prescribed fees. Creator of the company, contributor of the company, promoters and officers of the company. So on the payment of fees, who have the right to inspect the report submitted by the company liquidator? So the answer is 1 and 2. As per the Companies Act, winding up means winding up under this act, dissolution of the company, liquidation under insolvency bankruptcy code. I think we had discussed this. So the answer would be For question number 3, the answer would be 1 and 3. 1 and 3. Question number 4, which of the following below mentioned are not the functions of winding up committee? Remember, not the functions of winding up committee. Not the advisory committee, but winding up committee. Can be exclusive. That means 12 will not include the chair liquidator. Question number 4. Question number 4, the correct answer is 3. What is the jurisdiction of tribunal? What is the jurisdiction of tribunal? Though I said it is not much important, but yes, to entertain or dispose of any suit or proceedings or any claim made by or against the company? Answer is yes. To entertain or dispose of any application made under section 233? The answer is yes. To entertain or dispose of any question of priorities or any other question whatsoever, whether law or facts, including those relating to assets, business, and so on? The answer is yes. Obviously, these should be under the jurisdiction of tribunal. So, fourth part. So the company liquidator has to submit a report to tribunal within how many days? I think we all now are aware of this particular fact. 60 days. In what circumstances a company may company may be wound up on a petition under section 272 by the tribunal. So if the company has by SR resolved that the company may be wound up by the tribunal, if company has acted against the interest of the sovereignty and integrity of India, if the company has made a default in filing with the registrar its financial statement or annual return for immediately 5 consecutive financial years. So obviously, any of the above. Meeting of the advisory committee shall be chaired by, I think we have just discussed it, company liquidator. Company liquidator. Where the company to be wound up as the assets of book value not exceeding, oh, this is irrelevant. Which of the following matters the company liquidator shall include in his report? The manner in which the company was promoted or formed, the viability of the business of the company, or the steps in which his opinion are necessary for maximizing the value of the assets. Either 1 or 2, or both 1 and 2. Question number 10. So both 1 and 2. Both 1 and 2. Whether any remedy is available to creditors agreed by decisions of official liquidator? Yes, why not? Can the creditor go against the decisions of official liquidator? Very logical and rational. May file an appeal to tribunal. No doubt about it. The tribunal may, on a reasonable cause being shown and for the reasons to be recorded in writing, remove the provisional liquidator or the company liquidator, as the case may be, as liquidator of the company on certain grounds. Which of the following below mentioned situation cannot be considered as a ground for removal? Can misconduct be considered as the ground? The answer is yes. Fraud? Yes. Independent working having no conflict of interest? This cannot be a ground. You are working independently with no conflict of interest. This cannot be a ground, right? So question number 12, the correct answer is 3. This is a tough question, which I always believe this is very tough, where you are asked with penal provisions. So the promoters, directors who are not extending cooperation to the company liquidator, then they are liable to imprisonment and punishment. And both. So the correct answer is 13th one. Correct answer is quite tough. I'll open up the support part. Sorry. 6 months or fine which may extend to 50,000 or with both. Second. So when a winding up order has been passed or provisional liquidator has been appointed, no suit or other legal proceedings shall be commenced, or if pending at the date of winding up order, shall be proceeded with or against the company, except with the leave of tribunal and subject to such condition as the tribunal may propose. No application can be made to tribunal seeking for any proceeding pending an appeal before. I think we have discussed this. Supreme Court and High Court. Supreme Court and High Court. Why 4? Shriram, I think it is 1. Supreme Court and High Court. When can a winding up order not be called a notice of discharge? When the business of the company is continued. When the business of the company is continued. Powers and duties of the liquidator. Powers and duties of the company liquidator. So we can distribute this into 3 parts: business, statutory, and recovery powers, which is very logical. Business, because he has to run the business if the business is continued. Statutory, where some legally we have certain powers to conduct meetings, hold meetings, sign, execute, present, file a case, and so on. And recovery powers to recover the value from the assets. So if you distribute and understand business power to carry on the business, to do all acts and to execute in the name of the behalf of the company, business, to sell the immovable and movable properties and actionable claims by public auction, recovery, to sell the company as a going concern, recovery, to raise money required on the security of the assets of the company, business, you need to run the business, to institute or defend any suit or legal proceedings, business, to invite and settle claim, creditors, employees, business, inspect records, that is statutory powers, to prove rank and claim in the insolvency of any contributory of any balance against his estate, statutory powers. What does this mean? That if an individual has gone towards insolvency, that means I will file a claim against that person and prove my rank, that where do I lie, what is my ranking in terms of all the claimants. To draw, accept, and make and endorse any negotiable instruments, that is to draw a check, that is business. To take out his official name, letters of administration, that is business. To obtain any professional assistance from any person for support of his duties, again that is business. And to take all such actions, to sign, execute, and verify any paper for winding up, distribution, discharge of his duties and obligation, that is again normal statutory power. So you see, there are many powers given to the liquidator, along with to apply to tribunal and so on. Now, as a student, do we need to learn this? The answer is yes. I have given you the hint how to recall this. Nothing to be explained here because these are all general provision. The crux here lies in learning and recalling, not visually understanding. It's learning and recalling, learning and recalling. So as a student, what we need to do is during a preparation part, we need to identify sections which require learning and recalling or which require understanding also. Majorly in winding up, it is learning and recalling. Yes, we have understood 271, that requires understanding 271, 272 and so on. But then after 277, it's more process. So it's more of a learning and recalling. Learning and recalling. $291. Liquidator may, with the sanction of the tribunal, appoint one or more chartered accountants, company secretary, cost accountants, legal practitioners, or such other professional. And any person appointed in this section shall disclose forthwith to the tribunal in the prescribed form any conflict of interest. That means, if given a choice, the liquidator may appoint any other person which he deems necessary for the support and carrying on the proceedings under this particular provision. Now, if the powers are given to the liquidator, let's have a control over the powers also. So there are ways of controlling the liquidator. Method of control. By the advisory committee, which we have seen that there was an advisory committee of 12 members. 12 members, remember? Or by a resolution of the creditors or contributories at any general meeting. Now, what is this new general meeting? So this general meeting may be called by the creditors or the contributories. There's no role of the advisory committee or the winding up committee. A separate meeting may be called by the creditors and the contributories. So any direction given by the creditors or contributories and the general meeting shall, in case of conflict, be deemed to override any direction given by the advisory committee. Example, auction method. That what is the type of auction method to be published or initiated for sale of asset? As a going concern or in parts, or first let us distribute only the land and building and then the plant and machinery, or it should be through e-auction or by private sale, or whatever the methods have been prescribed. So the directions given by the creditors at any general meeting will always override the directions given by the advisory committee. So that is why the need of advisory committee for control. Winding up committee has certain responsibility, and these are all being supervised by the advisory committee. Another important angle of the power of the company liquidator. Power of the company liquidator. The company liquidator may summon the meeting of creditors or contributors. Remember, the previous one was very important. This particular section, this particular provision, resolution of the creditors of the contributories, very important. Please do remember this. Right. So summon of the company liquidator may summon meeting of the creditors or the contributories and shall summon such meetings at such time as the creditors or contributories may deem fit. So one is may on its own, but if the creditors request, he has to, he shall. If the creditors or contributors request, he shall. So he may call the meeting for purpose of ascertaining their wishes. And he will call the meeting whenever requested in writing by not less than 1/10 in value of the creditors or contributories. Or he may be directed by a resolution passed by the member, the creditors or contributories in a general meeting. And they may call upon the company liquidator to summon such meeting. That means this is a provision regarding when the company liquidator has to call a meeting of the creditors or contributories. So one on his own, and second on the request of 1/10 of the value of the creditors or the contributories. Any person agreed by any act or decision of the company liquidator may appeal to the tribunal, and the tribunal may confirm, revise, reverse or modify the act or decision complained of, that we have already seen. Simple question again. I think everybody should be able to answer who have heard this provision now. In case of conflict in direction given by the creditors at any general meeting and a direction given by the advisory committee, whose decision shall be final? I think we have just read it. Sorry. Creditors or contributors. Creditors or contributors. Now, certain miscellaneous provisions of accounts and audit. Let us just conclude this short provisions. Accounts and audit. So, books, with respect to books, he shall cause entries or minutes to be made of proceedings and meetings and of such matters as may be prescribed. And he has to account of receipt and payment made by him such form and manner as may be prescribed. So he has to record all the meeting minutes and he has to account for all the receipt and payment. Very simple. Further, he has to submit receipt and payment not less than twice a year to the tribunal. And when the accounts get audited, or a summary of it to every creditor and contributor. Big job. Big job. So one is he has to prepare the minutes. He has to keep an account of receipt and payment. He has to submit the receipt and payment not less than twice a year to tribunal. And he has to get the accounts audited and submitted to every creditor and contributor. This is with respect to responsibility of books and accounts. Further, if the tribunal requires, they can cause the accounts to be audited in such manner. And for the purpose of the audit, the company liquidator shall furnish to the tribunal all such vouchers and information as the tribunal may require. So this is an audit on persuasion of NCLT. One is suo motu, second is whenever the NCLT requires. When the accounts have been audited, the same shall be given to the contributory creditor and it shall be filed by the company liquidator with the tribunal and to the registrar. So remember, minutes, receipt and payment, maintain. Receipt and payment, not less than twice a year, file. Accounts audited, every creditor and contributor. Audit to be done on persuasion of NCLT. Once it is done, it has to be filed with the tribunal, registrar, and it shall be opened for inspection by creditor and contributor. If the accounts refer to central government company, then the same shall be forwarded to central government, state government, and if both are parties, then the boards. So tribunal has ordered winding up of Abhishek Private Limited. The creditors of the company brings to the notice of tribunal that though the company has been ordered for winding up, no information has been submitted to the liquidator. Explain as per the provision of the Act what remedy do the creditors have. So what are the remedies which the creditors can take? First, they can organize a general meeting and request the company liquidator to summon such meeting, and may apply to the tribunal for removal of the company liquidator. First thing, they can organize a general meeting, request for a meeting to the company liquidator, and then can apply to the tribunal for removal of the company liquidator. That is first thing. Second, they can file an application to the tribunal to get the accounts audited. Then the tribunal may direct the liquidator to prepare the audit report and submit the same. That is again the second remedy available to the creditors. So what will happen to the unpaid amount from the contributory, which we have seen under section 285, where the list of contributors are prepared? What is going to happen? So once the report of the liquidator is prepared, then under 296, a call will be made to all the contributories that please contribute your amount. And if any amount is unpaid even after such call, then section 295 may apply for a particular person. So 295, the tribunal may at any time after passing of winding order, pass an order requiring any contributory for the time being on the list of contributories to pay in the manner directed by the order any money due to the company from him, from the estate of the person whom he represents, exclusive of any money payable by him or the estate by virtue of any call in pursuance of this act. So somebody was asking, what will happen if the contributor does not pay? Then the tribunal may pass an order asking him to pay that amount. And even if after that he does not pay, then the tribunal may appoint a recovery officer. He may recover the assets and sell the assets, and then from that particular asset, sale of asset, he will pay that amount. I hope the question remains answered now. I think somebody had asked this question. I think Viraj had asked this question, if partly paid up contributor is denied to pay. So first a call will be made. First a list will be prepared. A call will be made by the liquidator under section 296. And if after call the amount is not paid, then under section 295, the tribunal will give an order requesting the contributory to contribute due from him or from the estate of the person whom he represents. So the whole process will be report of the liquidator of contributories, list A and list B. Tribunal will observe all the unpaid. Then call will be made under 296, and thereafter 295 will apply. When, let's say, the assets of the company are insufficient to satisfy the liabilities, the priority of payment has been fixed under section 2, 324, 325, 326, and so on. So nothing to discuss on this, but then if some cost is ordered by tribunal, then the tribunal may decide the priority inter se, that within the cost, electricity, salary, within the cost which is incurred during this winding up process, who will be paid in priority. So in general, winding up cost is paid in priority, but within winding up cost, which will be paid in priority, that has to be just. So one thing was contributing not paying the amount. The second aspect, again recalling, trying to connect the dots. 281 report, 282 report considered by tribunal, 283 based on the report that assets are lying with few people, then get the assets. 283 is the jurisdiction or the powers of the tribunal and the liquidator on the custody and the control of the assets. That is 283. Based on the report, let's say the report says that these are the assets, then those assets will lie within the power, the custody and the control of the tribunal and the official liquidator under 283. This is the sequence, report will consider, based on the report, the assets will be identified and custody will be taken. But what happens if somebody is not giving that asset? Then section 299 will apply. Then section 299 will apply. Tribunal may give a summons to any officer of the company, a person who is known, to any person who is capable of giving information, suspected to be indebted to the company, that is known, suspected to have in his possession any property, books or papers of the company. So three people, summons will be given: any officer, person known or suspected to be indebted to the company, suspected to have the possession of certain information, property or the books or papers of the company, or to any other person who thinks, the tribunal thinks that he will provide certain information. So summons will be given. Summons means that you have to appear in person. So tribunal may examine any officer or person who summoned on the oath. He will be examined on oath, either by word of mouth, written interrogatories or an affidavit, and may in the first case reduce his answers to writing and require him to sign. That means written answers will be taken from him. Then the tribunal may give a further order to that person, so someone to produce any books or papers relating to the company in his custody or power, but where he claims any lien on books or papers produced by him, the production shall be without prejudice to such lien, and the tribunal shall have power to determine all the questions relating to that lien. So if he has been questioned, if he has been asked to produce certain documents, and if he says that he claims any lien on the books or papers, the tribunal shall have the power to determine all such questions on the lien. And the tribunal may direct the liquidator file before it a report in respect of all the debt or property which are in possession of that other person. So that means finally the crux is that person who is not supporting, even if he is not part of the company, he may be summoned by tribunal, questioned, taken on oath, asked to, he may be interrogated and taken to task on by writing all the answers to the question asked. So once the report is given by the liquidator for all the assets and the debts for which the person is liable to pay that amount to the company, the tribunal may give an order to that person to pay the provisional liquidator the amount for which is indebted, or to deliver to the provisional liquidator the property or the assets in such manner and terms and conditions. So after summon, after hearing, after listening to liquidator, the tribunal may give an order of this nature. So friends, if you think that the contributor is not paying, tribunal will come into picture. If you think that the promoter, the directors are not supporting, they are liable to punishment. If you think the persons who are not paying to the company or who are holding certain assets because of any reason, then they may be summoned by the tribunal, and accordingly the tribunal may act and give necessary direction. So overall, this whole process is executed by liquidator, monitored by the committees, and facilitated by the tribunal. Facilitated by the tribunal. Now, somebody would say, sir, what if I receive the summons and I don't visit? So, necessary legal action will be taken, cost will be imposed, and it happens practically. Violation of any court order is liable to punishment, so please don't do that. So finally, a small part, the fraud and the oath and the NCLT. We need to understand the whole flow. We have seen the report under 281, order under 282, investigation under 210. Based on the report of liquidator under section 281, when he has mentioned that there is a fraudulent purpose for which the company was formed, he may be called in person under section 300. Then examination will be done if found guilty and if not found guilty. There are two provisions. So remember, 300 is basically for examination based on the report of 281, where the opinion has been formed that a fraud has been considered, fraud has been committed. Then that person shall be called to attend before the tribunal and then be examined. Shall attend, he shall be examined. During the examination, the liquidator shall take part in the examination. And if the person says that no, I should be exculpated from any such charges, tribunal, the liquidator will come and defend his situation, and the proceedings will be carried on. So don't get into all this, please. I'm just trying to just correlate that what is going to happen in case if A, B, C, D, C. If I have submitted a report of fraud, then what is going to happen? As you mentioned that there will be investigation 210, then 223, 284. Or if no investigation, that person may be called and examined, and he may be found guilty, may not be found guilty, and their process will be carried on. So don't get into these sections of 300, 301, 302. 301 is again after that what is going to happen? There will be arrest. When they are about to leave India or about to abscond, concealing any property or evading payment of calls, then he may be, arrested. And finally, under 302, this is the final section where the winding up order, the dissolution will be ordered. Condition: when the affairs of the company have been completely wound up, the liquidator will make an application. Remember, the draft report will be submitted to the winding up committee. Once the draft report is approved by the winding up committee, the dissolution will happen. So once the application is presented, on the application, the tribunal, when it is formed an opinion that is just and reasonable in the circumstances, then the tribunal will make an order. Then after the order, 30 days, after 30 days, the liquidator will forward it to the registrar. The registrar will record that this company is now being wound up, overall finish, and things are over. Right. So this is the whole process of dissolution, friends. from the winding up. Any questions which you have in mind? Any questions which you have in mind? So leave aside sections of beyond 297. Don't get into that. Till 296, it is fine. Questions have been asked on books of accounts and audit. Please remember 293, 294. These are important. Questions have been asked on 295 and 296. Questions have been asked on 281, 285. Role of advisory committee. These are the few questions which have been asked regularly. So you cannot skip those questions. So, right friends, so thank you for today, and we'll conclude today's session on this note. Hope things are now much clearer, and in case of any doubt, you can obviously put up a message, and or you can read through this, and when next time when we meet day after to complete the next part of winding up, we can discuss all your queries. So thank you, and good night. Sure, we'll do that.